Hello value investors, thank you for joining me. Today I want to talk about Snap and why I believe that Snap is still undervalued. We're going to talk about its revenue growth rates, then we're going to address the blemish in the results, and then we're going to talk about its valuation and bring this all together. If you haven't done so already, don't forget to check out my marketplace. It's called Deep Value Returns on Seeking Alpha. Make sure to get in before January 2021 because I'm having a price hike after the strong performance we've had in 2020. So let's get started. So there's a lot of things that are important here. So on the surface, the most important thing that investors are looking at is that its revenue growth rates for Q3 were up 52%. So this is important because not only does it shake off Q2's poor performance when it was up just 4%, but more importantly, there's a strong acceleration on its revenue growth rate once again. So this is the superficial line that investors have to consider about, talk about, think about. Now, this is a two-parter. So it has a very large engaged audience. They report daily active users, whereas Pinterest reports monthly active users. So monthly active users are typically higher because it's over a spread of a month, whereas daily active users are typically lower. However, you can see here that Snap's DAUs are 249 million, which is not only higher than Twitter, it's also higher if you adjust. Is higher than Pinterest. So you have a very large engaged audience. Now, for me as an investor, I really have an issue with companies' ability to generate strong cash flow or not. And this is why at this moment I'm not invested in Snap. I have been invested in Snap at one point, but at this moment I'm not invested in Snap because it's not really getting the type of cash flow that I'm looking after. Having said that, if we've learned anything from Netflix over the last few years, is that having an engaged audience really matters. So the way that Netflix decides whether something has been a success or not is really by the number of minutes that users have been watching the show or the film. So that's really how they measure engagement. And if you extrapolate that into the case of Snap, you can say, okay, yeah, I don't like the way that they report poor cash flow, but the cash flow is migrating towards the positive territory, and your audience is absolutely humongous. So, you don't have to like the Snap platform to recognize that there is this very strong platform here that's doing the right things. Revenue growth rate is strong, cash flow is migrating in the correct direction. So that's what I wanted to talk about. Another thing that is worth considering is that Snap trades at a large premium to its peers. So Snap is being priced at 21 times sales at 22 times forward sales. Okay, so according to estimates for its 2021 revenues, it's being priced at a 22 times multiple, which is higher than Pinterest's 19, and it's much higher than Twitter. So it does trade at a larger premium. Having said that, it has a larger audience and it's growing very, very rapidly. So maybe it's justified that it trades at a premium. For my bullish thesis here, I'm suspecting that I'm pricing in that the Snap's multiple does not expand. It just remains around that level of 22 times, doesn't contract, doesn't expand, and it's really just if the business is able to grow its revenues at approximately 45 to 47% year over year into 21, that's where the shareholders' return is going to come from the business, just from the share price following the intrinsic value. So we talked about revenue growth rates, we talked about the user base, we talked about the fact that I have an issue with cash flows, and we talked about its multiple. As always, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. Make sure to get in before January 21 because I'm having a price hike there after the strong performance we've had in 2020. Thank you for listening. See you next time.